Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 15th of October, 2018. And we're just around 2:35 in the afternoon right now. So as I'm looking at the markets, this is about where the settlement prices are going to come in the gold and the silver. And I think you'd agree. Suddenly the gold market has decided it's paying attention to the situation with Saudi Arabia. It's certainly paying more attention to what's going on with Italy, as the question there and Brexit is what's going to happen as it affects the European Union. And of course, we've had energy prices moving these markets as well. There's no doubts about that. Will the Saudis shut off oil? That's one of the threats that the market has been talking about for a good part of today. I think that when they did that many years ago, when we had those lines, I'm old enough, I was in them, to get gasoline, I think they learned a lesson. I'm not expecting that. But the question is, and the damage being done is, if they are found guilty of anything, it's a serious situation and a problem for the United States, especially in its Mideast policies. And I think that was behind the rally in the gold. And that could be why it jumped so dramatically to start the day when it got up as high as 1236.90. Now remember, it opened 1221.20. O stands on the chart for the open, and then it jumped higher and it's given up a chunk of the gain, but it's still looking pretty good. When we look at a weekly chart of closes, the market's gotten over that 18-week moving average of closes. It has not done that since back here in May. Was this enough of a break? Roughly $200 an ounce, going from $13.53.20 to $11.61.40 to say a bottom is in place. Until proven otherwise, it's certainly looking like that. When you look at the action on the chart, I'm going to back off a little here. We were going sideways through last Wednesday, and this is October 10th. The market then lifted itself very dramatically on Thursday, consolidated that lift, and made a higher high today. That isn't bearish action. What this action still is now is action that's got higher lows and higher highs. So if you were to take out 1219.30, which from where we're at right now is about, what, $9 or so, that would give you a pattern that you've got a higher high and then a lower low and maybe a small correction. Where could that go? Well, a lot of people will look at that 18-day average of closes and wonder if you're going to return to it or if the market's going to be able to do something else. And I'll get to that in a minute here. In terms of price, we're over the upper Bollinger Band today. I'll come to this in a minute. On Friday, the market closed at 1228.90 over, let me get right here, at 12, did I say that wrong? Today it closed 1228.90, right in that zone, over the upper Bollinger Band. On Friday, I knew I was doing something wrong. The market was back under the Bollinger Band, and the day before it was over it. So we're not getting successions where it's getting extreme. That's the point I'm trying to make. The 100-day average is the next resistance point on the chart at 1239. What I'm looking at is the overbought condition. Because both the K and the D numbers are nowhere near staying over 80 together, I'm just going to rate the market now as one that's in an uptrend, riding its upper Bollinger Band. Serious resistance awaits the market at 1239, but the bulls have grabbed control of this market. In GLD, it's the same thing, and notice the magic that you all of a sudden went to that 100-day average and you literally stopped at it. I mean, come on, that's what this is all about. And from there, you're already backed off from that number about 50 cents on the chart. It probably will try to get back under that lower Bollinger Band. It doesn't have to. But like the futures, you have a market that's overbought. So we have a market that has sprung, hit objectives to the upper Bollinger Band first, rode it, went today and visited and said, hi, 100-day average, backing off a little bit from there. When we come to GDX, will it be able to hit its 100-day average? That's what I'm looking for. Same thing as the other plays. Same thing also with higher lows, higher highs. Bullish, overbought. I'd be concerned that 100-day average, I think some money will come off the table, but there's no reason to be bearish any part of the gold complex other than it's overbought. The gold-silver ratio has still not turned where the other base metals are lifting with it, especially silver. As long as you're over the 18-day average, it means gold is gaining over silver, and that's how I view it at this point in time. In the silver, today, and let's take a look. You didn't do this the other days. Today, you came back and visited that upper Bollinger Band, and at that number, the 1480.5 zone, the market ran out of momentum. And 1480.60, if you round it, the next trade's 1480.5 on this thing, and that's basically what happened in the market. It ran up to that number. People noticed that. They stepped back. You have a pattern of a lower low, higher high. Certainly not as dynamic a chart as the gold, but there's, again, I'm not saying it's trending, but I'm saying the bulls have grabbed control. In the copper market, look at how many days you're hitting this 18-day moving average of closes. And in the process, the black lines, the Bollinger Bands, which are the algorithm to keep it trading within them, is narrowing in. Another way to look at it is you're getting less volatility. You haven't hit the 100-day average, and you certainly haven't hit the upper Bollinger Band. This market's trying to figure out what it's going to be. In the platinum, you went back on the past 3 days, have hit the upper Bollinger Band. The market right now is trading back under it, as you can see. Support then steps in at the 100-day average, but like the other metals, it is overbought. And the palladium market, I couldn't believe it today as I was watching this. The market still hadn't hit the 18-day average of closes. It took today to do it, and then the market lifted back to the upper Bollinger Band. In all honesty, I was looking from back here because my rule is that when you lose an embedded reading, which means the number gets under the 80 level after being consecutive over it for days, price and the 18-day average often make a run at each other. Now, they often hit too. So the market started pulling back, and then it started moving up on it. And I'm looking at it going, my analysis isn't right on that. It still should hit it. Didn't do it. Got to the upper Bollinger Band. Certainly wasn't right. And today, you came down, you hit the number. It's a question of when. That's what I teach. But often it's quicker than that. And so that was a delayed reaction. In the dollar index, the dollar can turn bearish here. You got to keep your eyes on it. If you close under 94.64 because you're having an outside day down today, that would give you lower highs, a lower close than under it. It's not there right now. You're over that number by 6 points, 10 points right now. You're at 94.78.5, and the 18-day average is 94.68.5 roughly. You'd have to be under that. If that occurs, then I'm looking for the 100-day average to possibly offer some support in the market, but that would be a problem. Right now with this action, should today's highs be taken out tomorrow, Tuesday, or Wednesday, this would be, in my work at least, a bear trap, and unless you immediately went back under this low, you put into play the possibility of getting back to the upper Bollinger Band. It would be a trap, and the reason is when you take out the high of an outside day down, you look for, at least the way I teach this, I look for the closest moving average. The key averages are both under the market, so that puts the Bollinger Band back into play. Just something that I look at and like to see what's going on. We talk about a lot of this. If you're a person that follows technical market decisions, if you like to talk about option plays, the futures, what's moving markets, we cover all this in categories that you might like. We tie the energies, the financials together for you. Certainly the metal markets are covered in great detail by what we try to do with you. Special reports, you know I write metal reports, so you're able to get some of that. Now this is what our clientele get. And these are people that either get our research in one manner or the other, they're trading through us, but we'd like you to see what they get. I think you'll find the difference from what you're getting. Maybe not, but I think you will. You can call us, you can visit our website to sign up for it, or you can click up here and that'll take you right to that page. I'm Ira Epstein. You have a good day.